go ahead and get started here, folks. We got Sean and Mark from Baltimore Life joining us here this morning. Good morning, Sean. Good morning, Mark. How are you guys?
Morning, Matt. Great. How about yourself?
Doing very well.
Doing well.
Very well. Thank you. Thank you
Thanks
guys for hopping on. Yeah, thank you. This is our first time hosting a webinar with Baltimore Life, one of our newer partners here at IAMS. They've been around like only 140 years or something like that. How long has it been?
Yeah,
Is that about right?
143 years now. We're just getting started.
Just a little while. So long time coming. We should have had them on a long time ago, guys. But it's about time we get to know Baltimore Life and their excellent product lineup and some of the processes that they work with agents on. But first, my name is Matt Sabala. I'm an annuity sales director here at IAMS. And we're going to go through very quickly, guys, just our brief 10-minute intro that we typically do on these webinars, why producers like to work with us here at IAMS. So 38 years ago now, many of you are aware, Charles Hiring founded IAMS on a foundation of service. And service is something everybody tells you they're good at, but we truly embody here at IAMS. I mean, we just spent $100,000 on our new phone system, but we disabled voicemail because we don't want you guys ringing through to voicemail. We want you guys to talk to a live person, get what you need handled immediately as soon as you call in, every possible time. And we've got a great team of people behind the scenes working with you that I'll detail in a little bit, but we've got people assigned with each carrier that understand the ins and outs of each carrier, including Baltimore Life, and help your business go through as seamlessly as possible. So let me detail some of the other reasons people like to work with us here at IAMS, starting with our new producer builders, or I call it the new producer bonus program. So I've been here at IAMS, just coming up on 2 years here in a few months. Have some experience in the industry before that with a couple of different IMOs. And one of the things that IAMS does is help people get a fast start, I think, better than any of the other places I've worked or the other programs that I'm aware of. And in that first year and a half here at IAMS, I've had several people hit the $1 million threshold during their first 6 months with us here at IAMS. So FIA business counts dollar for dollar. If you hit any one of these thresholds, you are going to get an opportunity for us to invest in your practice in a big way in terms of marketing, or we can just reimburse you with cash as well. But using one of these different thresholds to either help you put on seminars, use one of our internal lead programs, work with any one of our 30 vendors, or use what you're already using that's been successful for you, is how we'd like to help you keep your sales funnel full in 2025 and beyond. So this is a great way to get started. If you got questions about this, or you've been with us and you wonder how much you have in your new producer bonus, let us know. We can easily look that up for you. Life business usually counts at about a 10-to-1 on this, and I know Baltimore Life will be excited to tell you about some of the opportunities that we have there. But after that first 6 months, we continue to reinvest in your practice in terms of a marketing reimbursement. And it's very powerful. A lot of people forget that they have it, and that's a disservice, I think, from their sales director, or not remind them of that, to be honest. But if you have money sitting in your marketing reimbursement, let's put it to work for you, because all we want to do is give you more opportunities to sell to clients. So another way that we reinvest heavily in our producers is our referral program. Just like you guys, the best new client for you is typically from a referral. It's the same thing for us. You're our clients. And so let's use an example here. If you send somebody our way, we get them contracted, we're going to give you $50. No big deal. $50 is $50 though, but the real money starts kicking in when they start writing business. If they write a $100,000 index policy, we're going to give you $200 every time that happens. And that'll continue indefinitely as long as you guys are both contracted here. So our leadership here at IAMS writes checks each quarter for thousands and thousands of dollars. It's something like $30,000 or $40,000 on average that we're paying out to advisors for this referral program. It's a great way of developing a downline without the liability of an agency. Speaking of an agency, though, I just took a call from a newer advisor that I'm working with who is building out an agency. That's something that we specialize in as well. Me and one other person here at IAMS do a lot of that. Please get in touch with us. We can help you set up that agency as well. Back office support. So going back to service, there's three things we do really, really well here at IAMS, and I am comparing this to pretty extensive knowledge that I have throughout the industry. One of them is back office support. So we have people, like I said, who know the ins and outs of each carrier that we work with. With some of the larger carriers like your Athenes, North Americans, we have more than one person assigned to them. But what we do is we are going to help you get your business submitted as seamlessly as possible. A lot of that is being done electronically now. And then we have a team of people who follow that business from submission to commission to ensure that, one, we're helping you overcome any sort of obstacles that you might encounter before you do, and two, that when you do encounter those obstacles, that you're spending your time as much as possible in front of clients doing what you do best, and we are the ones on the line with the carrier and figuring out why in the world, Equitrust is sending that check back to Great American or whoever it is when they shouldn't be in the first place. So we try and take that off your plate, and we're very, very good at that. We've got Michelle and her team on the life side, Mackenzie and her team on the annuity side. And all we want to do, once again, is give you the most opportunity to do what you do best, which is sell, and we'll take the rest of that off your plate whenever possible. Our website has all sorts of good information. If you've never had a walkthrough, please get with your sales director like me, Matt Sabala, or another one of our sales directors on the annuity or life side. Give us an opportunity to walk you through that. Lots of critical information on there, including Luma, Firelight, Annuity Rate Watch, just industry news, our sales resource tool. Sales resource library is fantastic. But we'll spend 30, 40 minutes going through that with you. Some great resources there. Speaking of fantastic resources, if you're not doing e-business now, you really are doing yourself a disservice. I don't care whether you're 36 or 86. It's easier to do than a paper app. We can help you set that up, and it'll go more quickly after your first time doing it than a paper app ever will. It'll catch things that you're missing, catch things that may be incorrect, and it allows us to more easily just see what you're working on right then and there and help you through that process. It's just a couple of clicks away on our website. Please let us know if you want some help doing that. Second thing I think we do really well is our creative services. We have a team of people that do everything from business cards and stationery all the way up to getting you on the radio, getting you on Fox News if you want to. Whatever it is, we can help you, meet you where you're at. We've got an excellent team of people. All they do is work in financial services. It's a lot cheaper than going down the street and hiring somebody to do this as well, because it's not a profit center for us. We develop lead programs and all this different stuff that is not a profit center for us, and we really can do it in a less expensive manner than any other way that you can think of, and in a lot of cases we use your business to pay for it, so it costs nothing or very, very little. So please let us know if you need help with branding or if you'd like a customized marketing analysis. That's something I do with every new agent I work with, and something I do usually about it on an annual basis with people as part of the planning process. Find out where you're at in your practice right now, where we can align with your goals. We always start with your goals, and if you haven't outlined those specifically, again, you're doing yourself a disservice. But how we back into those goals through a customized marketing strategy to help you meet and exceed your goals for 2025 and beyond. Let us help you with that customized marketing strategy if you have not had it done. We don't charge for it, and I believe it is a fantastic service. IAMS Wealth Management is our security side of the business. Back in 2016, 2018, when everybody was worried that you would have to get your 65 at the least to be able to continue to sell FIAs, we formed IAMS Wealth Management, and it's grown to well beyond just kind of that piece that covers the liability there. But now we have about 100 advisors who work with us on the security side as well as their insurance business. If you're interested in getting your 65 and earning that license as an additional piece of credibility for you, especially when you're meeting with those high net worth individuals, it helps you keep them close So they don't have to go to talk to another advisor. But if you don't want to get your 65, meet with our IAMS Wealth Management team. They'll go on a call with you when there's an opportunity with a large client like that, so they don't have to talk to somebody else, because chances are, in that case, there's a good chance that you're not going to be able to capture all of that business, if any of it. And so our IAMS Wealth Management team is fantastic there. If you want to earn your license, they're also a great resource to help you achieve that. Third thing I think we do really, really well, guys, and I'm almost done here, is our Life and Annuity Academy. So we do several of these throughout the year. The first one is going to be at the beginning of April. In fact, I'm going to do a short poll here as we're talking about this. But this is an opportunity to learn from people from the very apex of the industry, other advisors who have reached the level of success most of us are trying to reach. So they're going to teach their best practices, their sales processes that have allowed them to reach the level of success that they've reached. And all they're doing is sharing those ideas with you, as well as product, sales resources that maybe are new in the industry or that we're seeing a lot of success with at the time. If you'd like to attend, please let us know right now, and we will try and get you out there to our first one at the beginning of April, which will be in Des Moines, and we move those around throughout the year. So the first one will be in Des Moines. I'm sure we'll have a couple in Omaha. We may have them throughout other locations throughout the year. All right. Thank you for voting. Finally, we're big on incentives for our producers. Not only that new producer bonus, but if you reach $5 million with us in FIA business or qualifying life business, we want you to join us out at a really nice resort in Quebec City. We call it our Trek to Quebec. That qualification is going to finish up at the end of June this year, but we are going to have a whole bunch of advisors out there, and it's a great opportunity to kind of participate in a fraternal, really relaxing week of where you're getting an opportunity to meet with other people who are doing really, really well in the industry and share, again, some of those best practices with people who are right up there at the top of the industry. So really cool opportunity. It's always nice to see some new faces out there. But I tell you, the people who make it are usually pretty consistently making it. So once you've made it, there's a good chance that you're going to kind of be in that network of people who can help you continue to sustain that level of success. Okay, I said finally too, like us and follow us on Facebook, LinkedIn. Social media may not be real important to you as an individual, but for a lot of your clients it is. And it's good to stay in front of them on a consistent basis and look like the professional you are. If you don't have that capability in your practice, it's very easy to add on an automated basis. Let our creative team know, let your sales director know. We can set that up for you. But please do like and follow us on Facebook. We share some critical information on there from time to time. But with that, let me hand it off to why you guys are actually here. So we've got Sean O'Connor, VP of Distribution at Baltimore Life, and Mark Brandt, AVP of Product Development with us. They're going to go through their product portfolio and tell you a little bit about Baltimore Life. So guys, excited to have you. I'm going to change. Oh gosh, we got 4 Sean O'Connors in here because of those invites. We're going to have to find the right one, Sean. Hopefully this is you. I just changed presenter to you.
Okay, good. So thank you, Matt. Like Matt said, I'm Sean O'Connor. I'm joined by Mark Brandt, who's my colleague. We've both been with Baltimore Life for quite a while. We're going to give you an overview of who we are as a company. We're going to give you a brief overview of the products and then dive right into our multi-year guarantee annuity product, which we just rolled out this past fall and got IAMS set up as well. So before I dive into that product, let me start just with a little bit about the several different product offerings that we have. And I'll try to keep it real simple. And we're not going to spend much time on our single premium life products this morning, but I think there's a real opportunity for all of you, whether you're a life-focused agent, an annuity-focused agent, or if you do a little bit of both. We've got 2 single premium life products that we feel, and I think you'll find to be niche products in the industry. There's not a whole lot of carriers that offer those 2 products. So the two products are a single premium whole life product, which you can fund with non-qualified after-tax dollars, as well as cash value from life insurance contracts through 1035 exchanges. And then the second single premium life product that we sell is an immediate annuity that funds a whole life contract all packaged together. And so that product is generally funded with qualified pre-tax dollars or tax deferred annuities. So, you all have plenty of clients that have annuities that they're not using for income, right? And so an efficient way to transfer assets to a beneficiary is through that type of a product as well. So we're not going to spend much time on those this morning. The reason I start there is you'll find them to be super competitive in terms of the product offering. You'll find them to be niche products where other carriers aren't selling them. And I also think they're products and they're really sales concepts and ideas that most of your clients have never thought about. Most of your clients, they've got annuities or you're selling them annuities for tax deferred growth for potential income in the future. A certain percentage of those annuities are not used for income, right? And so those two product lines are sitting out there. Happy to give you more information. Happy if Matt wants to have us back in the future, we can dive right into those in a much deeper level. But I start there because we've offered those for years, and we continue to refine them and assure they're very competitive. They're very lucrative from a compensation perspective, and we look forward to bringing you up to speed on those more in the future. With that, before I switch into the multi-year guarantee annuity, I'll give you just a little bit about Baltimore Life if you're not familiar with us. Like Matt said when he introduced us, we're a 143-year-old company. We're a mutual company, which means we're owned by our policyholders. So our objective is to be profitable for our policyholders, to make sure that we're around for another 140 years, to pay claims, to make good on the promises that we've been making in the past. So that's how a mutual company operates. We find it to be certainly a value proposition in the life space and the annuity space because we're not trying to be profitable for a shareholder. We're assuring that we're profitable and relevant to pay future claims. So that's important. We're also very small compared to some of the carriers that you might use. Being small gives us another value proposition, which is we want to provide exceptional service to all of you. Like Matt said, that's at the core of what IAMS does. That's at the core of what we as Baltimore Life do, is provide exceptional service. So when you need help, when you need support, whether it be sales support, whether it be contracting support, if you have product questions, we're going to get back to you quickly. We're going to be responsive, and we're going to be easy to do business with. So we feel that that's important. Being that we're small, we're a B+ company. That's our rating with AM Best. We're an A- rated company with Kroll, which is another rating agency. We've got 1.3 billion in assets, and we've got a surplus of around 90 million. We manage our company very conservatively in terms of our investment portfolio. We don't take a lot of risk trying to achieve greater returns. So you'll find our financials to be very strong, which allows you all to obviously be comfortable when you're selling our contracts that we're going to be solvent for decades and for 140 plus years to come. We're not taking a lot of risk with the portfolio. Also, a big value proposition for this product as we move into the MYGA, we're in 48 states. So you can sell this product in all states except for New York and California. We are waiting to hear from California. We hope to get approval to sell the product in California as well. We have no plans to sell it in New York, but it's important that you can sell this product across 48 states, hopefully to make us your carrier of choice when it comes to a MYGA. We've built this product to be top of the market in terms of interest rate. So we always want to make sure that we're offering if not the most competitive interest rate, at least within 10 to 15 basis points of anything that's out there offered by other B double plus companies. So we want to make it easy for all of you to not have to go out when you're illustrating a MYGA and selling a MYGA. We don't want you to have to feel like you got a quote and do a bunch of research on 12 different companies to try to find the best interest rate. You'll know that we're always going to be top of market in terms of interest rate, and we're also going to be top of market in terms of agent compensation. So our street compensation on our 5-year MYGA is 2.5%. And so you'll find that to be at the top of the market as well. So given that, obviously MYGAs are pretty straightforward. There's not typically a whole lot of bells and whistles. We will get into a couple of the riders that we offer, but we're going to keep this product real simple. We don't sell a FIA, so we're not going to be your fixed index annuity carrier. We're purely in the MYGA world currently, and that's our plan. Our plan is to, like I said, be as competitive as we can with this one product offering when it comes to annuities. And then, like I mentioned earlier, the 2 products for single premium life, which I think you'll find to be extremely valuable to your portfolio as you look into those as well. So with that said, I'm not going to spend a lot of time on statistics. You all have been in the business. You know the fact that our clients are looking for ways to guarantee an income in retirement. They're not able to rely solely on Social Security in most cases. So you're able to offer them a MYGA that's going to give them an interest rate, a tax deferral for future savings, and help them to accumulate assets in a tax deferred environment. And then ultimately, if they do turn on an income, they'll have more options when they get to that point in retirement. So that's the market. Obviously, that's the opportunity. In terms of who you're going to sell this product to, we see most of the sales going to the pre-retirees and retirees, right? If you were to look at the average age of a MYGA client, probably somewhere between the ages of 50 to 80 is where you'll see most of the business going. Although you'll see that this product can be sold to anyone ages 18 to 89, so you can really sell it to any adult all the way up to actually maybe age 90. So you've got a wide market that you can sell it to. Typically, like I said, we're selling it to the people that are thinking about retirement or already there. It is going to offer a low risk, right, for the client because it's a guaranteed product. So it's going to have a guaranteed interest rate. There's nothing left to chance. Unlike a FIA, which would be tied to different indexes and the markets, right? This is just a pure fixed interest rate tax deferral. So if you have clients that are looking at, they like to have money guaranteed in a certain interest-bearing account like a CD or a savings or money market account, your alternative here with a deferred annuity is you're able to offer them a competitive rate, maybe a better interest rate than they would get at the bank, but you're also able to also offer tax deferral, which means their money is going to compound quicker if they're not paying tax on the interest every year, right? So that's really who you're going to be offering it to, with the thought that one day they might want to create an income stream from their annuity funds. You can sell it with both non-qualified and qualified dollars. So your non-qualified are your after-tax dollars, and then your qualified funds are your pre-tax, your money that's sitting in typically 401ks, IRAs, things like that, 403bs, tax sheltered annuities, any of those types of vehicles where the client hasn't paid tax on it yet, that can be rolled over. It can be rolled over through a trustee to trustee transfer, no taxes paid, and just continue to grow those assets for your client. So why us? What makes this product different? Again, MYGAs are pretty straightforward, right? There's not a whole lot of variation from one company to the next other than interest rate and agent compensation. We are going to offer a guaranteed rate for the 3, 5, or 7-year period that you choose. It's also there's going to be a guaranteed interest rate even when the policy comes out of the surrender period, right? So if the client chooses not to roll it over at the end of that 3, 5, or 7 years, it's going to have a guaranteed rate included in that product as well. When you sell this product, there's a rate lock feature which means as that money's rolling over from wherever it is to us, we're going to guarantee the rate that you quoted is good for 45 days. We're able to typically roll over money in less than 30 days, but depending on the institution that it's coming from, we want to make good on the interest rate that you quote to your client. There are varied payout options if and when they do take an income stream from the annuity. As you all know, most MYGA clients do not turn on an income. They're looking for an interest rate and saving their money, right, and deferring taxes. They're not typically starting an income stream from it, but there are income options available as well. And the beautiful thing about annuities, it's the only product that's available and on the market that can guarantee an income for life that you can't outlive. There is no other product that offers it, right? There's no bank that can offer the client the peace of mind of never outliving their money. Only life insurance companies can do that through annuity products. So again, it's a talking point as you talk with your clients. Why would I buy an annuity if they're not used to buying annuities? What's the purpose of it? And that's one more talking point to hit on. It is a single premium product, so it's a one and done. Once this contract's in force, you can't keep adding premium to it. So it is a single premium. Typically, it's going to be a rollover, right? Whether it's coming from another life insurance company or a brokerage account, but it can also be funded with cash coming from someone's checking account. The product that we offer has a 3, 5, and 7-year guarantee period. So it's really just going to come down to what the client wants in terms of how long they want to lock up their money for, and then the interest rate that's associated with that 3, 5, or 7-year period. We'll hit on interest rates just briefly this morning. There's not a whole lot of difference in the current interest rate environment between the 3, 5, and 7. That obviously can change as rates change. But there's also a guaranteed issue rate beyond the initial contract term, like I mentioned. Our product has an automatic renewal. Part of the way we're able to offer the best interest rates and the best agent comp is to give the client just a short window of 30 days to roll it over at the end of that 3, 5, or 7-year period. So you're going to make sure you stay on top of that as you get closer to the end of that contract period. As you all know, the beautiful thing about the annuity market is you have deferred repeat business for your clients every 3, 5, or 7 years that these products come due. It's a sales opportunity for you to roll it over either with us or with another carrier, depending on where interest rates are at that point in time. And then there is a pre-look period like any insurance contract. Once the policy is issued, the client's going to receive their contract. They have a period of time to make sure they're comfortable with it. I'm sure you all like to touch base and make sure they don't have any questions, make sure that they don't have buyer's remorse, and that the policy is good to go in terms of placement. So product details, I mentioned this before, age 18 to age 90, age last birthday, so you can write it right up until they turn 91. Minimum premium is $5,000, maximum premium is $1 million. That's per policy owner. So we can't do more than $1 million on any one individual, but you can do as little as $5,000 up to $1 million. The interest rates don't change based on the amount of premium they give us. So whether it's a smaller case or a larger case, the interest rate would be the same. The 3, 5, or 7 years we mentioned, the funding options we mentioned as well. And then the death benefit is a withdrawal value paid to the beneficiary at the death of the owner. So typically, if they don't have the rider, the surrender value is going to be paid at the owner's death to the beneficiary. If they would prefer that the full accumulation value be paid to the beneficiary at their death, they would opt to purchase the rider, which we'll cover momentarily. The minimum interest rate is really only important when they come out of the surrender schedule. It's going to always be somewhere between 1 and 3%. Right now, it's closer to the 3%. That varies based on the market as well. Annuitization options, like we mentioned, most clients don't annuitize. If they do, they have 4 different options on how they might want to take their income from this contract. And like any annuity contract, it is illustrated. You'll be able to run your illustrations right in our agent portal, which is going to show the interest rate. It's going to show how their money is going to grow over the period of the contract. Does not pay dividends, obviously, as a MYGA contract. There is surrender withdrawal charges if they don't have the rider, which we'll comment on briefly as well. But if they have the rider, they can take 10% a year out penalty free. So if liquidity is important to them, you would add that rider for them so they have access to pull money out. And I think the important thing there is if you're selling this contract to somebody that would be of required minimum distribution age, so age 73 or older where they're taking distributions, you would definitely want to add that rider to be able to take the RMDs each year. And then you can see our surrender schedule, pretty cut and dry. Again, not much different than what's out there in the market. But if they were to surrender the contract, it's going to charge a fee to do that, which is going to reduce over the 3, 5, or 7 year period. I'm going to cover the 4 different riders here briefly. The first rider is the free partial withdrawal rider, which, by the way, each of these riders come at a cost, right? So if the client has no need for riders, you're quoting them the interest rate only. It's going to be at the very top of the market. If they want to add riders, it's going to come off that interest rate, very cut and dry. If it's important to them, they'll see the benefit to pay for the cost of the rider. The first one being the free partial withdrawal rider. Basically, they can take 10% a year, up to 10% per year each year after the first year if they have liquidity needs. If they want to add that rider, it costs 20 basis points. So, for example, if they're getting 5.65% interest on a 5-year annuity, if they want liquidity and they want to add this rider, instead of getting 5.56%, they'll get 5.45% for the liquidity feature. Again, it's pick and choose what, if anything, they want to add in terms of riders. The nursing home rider, that costs 10 basis points, pretty cut and dry. We waive all fees if they end up qualifying for nursing home care. So instead of getting hit with the surrender charges, if they need the money, they have access to all of it in that event. Probably less popular than the free withdrawal rider, but it's a rider that you can talk about nonetheless. As well as the terminal illness rider, again, 10 basis points. If they end up terminally ill, they can access all of the accumulated value without penalty. Again, not a real popular rider, but it's there for somebody that might have that concern. And then lastly, the enhanced death benefit rider. This costs 15 basis points. And then when the policyholder were to pass away, instead of paying the surrender value to the beneficiary, we would pay the full accumulation value to the beneficiary if that's important to them. As you know, some clients will say, I'm not worried about that. I'd rather get the extra 15 basis points of interest for my money. Or they'd say, yeah, I want to make sure that my beneficiary gets all of it without a penalty if I were to pass away. So again, you can add that rider. They can add all 4 riders if they want. They can pick and choose 1 or 2 or 3 riders if they want, or they can opt to not take any of the riders. Again, if it's qualified money and they're going to be of RMD age, they should take the first rider, which was the free withdrawal rider, so that the RMDs can be processed without penalty. And then I'll just hit briefly on submitting new business. Mark's going to get into the e-application for us a little bit this morning. We offer, pretty much all of the business that we see coming through is through an e-application, which we prefer. There is a paper option if needed. But as you submit new business, everything is done through our agent portal. So it's one-stop shop. That's where you're going to run your illustrations. That's where you're going to have access to your marketing pieces if you need them. That's where you're going to also complete the e-application with your client. So pretty straightforward. It's going to vary by state, obviously, depending on what state you're writing the client in. All of your exchange forms, your trustee-to-trustee transfer form is a part of our e-application process. Your replacement forms are also part of the e-application process. A few states have their own state-specific version of that. In general, most states just use the standard replacement form for that. And then, like I mentioned, sales support, it's all going to be right there on your agent portal. But in addition to the agent portal, as you need any sort of additional support, we've created an annuity services team. They're available Monday through Friday, 9 a.m. to 5 p.m. Eastern time. There's an 800 number you can call them. There's an email, you can email them, they'll respond to you that way as well. So we want to make it easy for you to get the support and answers to your questions as they arise. So that's really it when it comes to product. I'm going to turn it over to Mark to talk about the process a little bit this morning as well. And Mark, I don't know
Hey,
if
Sean.
you can take over or if you want me to just share my screen, whatever's easier.
So I think
Sean, I've got a real quick question, if that's okay.
Sure.
Before you move past the MYGA. So at death benefit, because I did have a couple of questions come in. If a client had a qualified account that passed to a non-spousal beneficiary, how would that work if they were just like 3 years into a 5-year contract? Would they just hold on to that contract for the last 2 years? Is that what they would do if they didn't purchase one of those riders?
So we do offer the non-spousal inherited IRA option, right, Mark? I think if we're not aware of a claim, the claim could be processed obviously any time, but if should they choose to process the claim immediately upon the death of the policy owner, and it was going to a non-spousal beneficiary. Mark, is there any additional color you can provide around that question?
sure. So if it's a death, we would be paying out the proceeds upon death to the non-spousal beneficiary. So having the death benefit rider would be a good idea. We can also basically accept those funds into a new annuity as an inherited IRA. So we do accept inherited IRAs, but that would be a death proceeds situation, since you mentioned, the owner dying, and it would be good for the client to have the death benefit rider to waive all of the MVA and surrender charges day one. So if they have that rider, day one, we waive all the surrender charges and MVA upon death.
Okay, perfect. And if they did do an internal replacement with you guys, do you waive any of those surrender charges, those MVA charges, or is that part of the calculation if they have not purchased that rider?
We do not offer we're going to only give the surrender value if they don't have the rider.
Correct.
Okay, and last question before we move on. What is the cost for the liquidity rider for RMDs? Was that 10 basis points? I know you went over it.
That was, let me go back, that was 20 basis points.
Yes, that was 20.
Okay, perfect.
Real quick. Yeah, so
the only two questions.
Yep, 20 basis points for the free partial withdrawal rider.
Yeah,
okay, perfect.
And even though we have a 10% limit on withdrawals per year, if it's an RMD and it's over 10%, we'll still honor it and not assess a surrender charge. So if it's 11%, we'll honor the RMD without any surrender charge if they have this rider.
Yep,
good deal. Thank you, guys.
You're welcome. All right, I'm going to turn it over to you, Mark.
Yeah, so Matt, can you give me control to share my screen? Or
I will sure try.
Or we can just move through the slides for you, Mark, if that's easier. I've got it up.
And that's fine. If you wanna, we'll run through it real quick. So anyway, we have an EAP system. It is an efficient way to submit business. Of course, I think you all know that you minimize NIGOs in that situation. We wanted to go through and show you our EAP. It's not Firelight, but it is a best-in-class EAP system that many companies are moving to. So we want to show you how intuitive it is. We do have our suitability process that's automated inside of our EAP. So we have rules. Right now we're looking at our rules manually to make sure they're all operating correctly, but eventually this will be really quick and easy to do the suitability within the EAP as well. And then we also have pretty simple navigation. You'll see in the left margin, we have green check marks when you complete a screen, and then if there's still a red X, it means that there's some information that hasn't been completed yet. Okay, next slide. One thing that's really important, if you're already appointed for life products with us, for our single premium products, which some of you may be, you have access to our website. If you're new to Baltimore Life, and you get appointed for iCumulate, you're going to get a welcome letter from our contracting department. It'll be from Baltimore Life Contracting. And it's important to open that welcome letter because it has instructions on how to register on the website. You'll use your NPN number and a password, and you'll get access to our website. Once you get access to the website, you'll have access to the EAP, as well as, like Sean mentioned, our marketing materials, our agent guide, all the information on the product, including the EAP. So it's important once you get that. I had an agent that either overlooked his email or it went to his junk. We had to resend the welcome letter. He was able to log into the website and submitted an app. So that worked great. But I just wanted to alert you that make sure to be looking out for that welcome letter when you get appointed. Once you get into the website, you will have a dashboard. Okay, next slide. The dashboard into our EAP system will show you basically the application number, the annuitant or owner's name, the status. So once you start, and it's maybe hard to see, but in the left blue margin, we have an EAP for life as well as EAP for annuity. You'll want to make sure that that button in the middle of the blue bar, you'll hit the annuity EAP, and that will give you a list of the annuity applications that you have in progress right now. And then once you want to start a new application, there in the lower right-hand corner where you see the red arrow, you can create a new EAP by clicking that button. Next screen, this is the first screen that you get into, which is the application information. You'll see that the app number that came in the first screen is already automatically populated, as well as your name. The important thing here on this screen is to select the e-signature option. We have three: agent, device, email, and text. It's important that you identify all the parties to the contract. You might have an owner, you might have a joint owner, an annuitant that's different than the owner, a joint annuitant, and then also a payer. You have the ability to have different parties to the app. Make sure that they all have the same access to the signature that you've chosen. If they're all signing on your device, that's great. If most of them are signing on the device and one needs an email, that won't work. You all need to move to email. So make sure that everybody, that's why we have the selection up front, is to make sure that everybody has the same access to whatever the signature option is. The next screen is the proposed insured. I think we might have skipped over the owner screen. I guess not. Okay. Anyway, in the I think this is the owner information, and then if the annuitant, actually, excuse me, this is this is the annuity screen, and if you have a joint annuitant, there's a little toggle button that you can click to enter the information for the joint annuitant as well. Next screen. And one thing I'll say, that the annuitant also needs to be a US citizen, and that question is in there. You do have the option of having a different owner than the annuitant. Actually, the owner is most oftentimes the same as the annuitant, but you have a way to toggle the owner's information if it's the same as the annuitant. And you also have the ability to elect with a toggle the joint owner, and you'll need to complete all of the joint owner's information. In the product detail, you will see that you have options, the top outside of this red box, but you have the option of non-qualified, qualified, or inherited IRAs. You'll see that this option here, the only option we have right now is the MYGA, which is a single premium deferred annuity. Okay, next screen. So I think we're skipping over some screens here, Sean. I think if
Yeah, we may be, Mark. I don't know if this is a different version.
yeah. So
Yeah,
in the,
we were, Sean. I think I can share this so you can have control of it. Let's see here.
I don't know how important it is, Mark, if you just want to keep moving since we're coming up on
This one
time.
is kind of important that we skipped over, and that is the add premium contribution. So there's a button on the main screen on the primary on the product information screen that has a button in there to add or modify premium. It's a little bit in light print, but you need to click that button in order to open this payment detail. Once you do that, then you have the option of putting the type of source of funds as well as the amount of premium that's going to be paid. You have the ability to add multiple options. Like if you have two 1035 exchanges, you can add them both in the estimate of the premium that's coming across for both. Once you do that, then you can click finish. And then if you wanted to remove one, there's a little an arrow next to the red trash can. You can remove a payment option. Okay, next screen. Okay, product selection. You'll see that the premium that you entered in the previous screen will be populated. You have the ability to select riders. If you want to deselect a rider, you click the X next to the rider. In the householding question, this is for those, if you have a joint owner and you want to just have copies of, if you want to be a little economical, you can choose to do householding, which we will send materials and disclosures to just one owner. If you don't elect not to, that's fine too. The owner and payer information, I guess this is where we're going to find it in this slide deck, and that is you have the ability to toggle if the owner is the same as the annuitant, and then if the payer is the same as the owner, you have the ability to toggle here, and it will also populate all of the owner's information in the payer. Next screen. Beneficiary information. It's important you have at least one beneficiary. And you have the ability to add multiple beneficiaries with no limit. You need to make sure that all of the beneficiaries add up to 100%. If not, you will get a pop-up warning message. If you do, you need to click the add or modify beneficiary button. It's very faint, but you see kind of two gray bars there. That button is in between those two gray bars in the screen. And then once you've completed and they add up to 100%, then you'll see that the names of the beneficiaries are listed, and then you can click the next button. Suitability. We have, like I said, we have automated suitability. Once you've completed it, you will, before we get to that screen, there is a question down here at the bottom, and that is, an agent supplemental suitability form. If you feel like you need to communicate more information about suitability, we don't have this fully automated yet, but electing to a yes in this question, it becomes an outstanding requirement, which means that you need to send the form to us outside of the e-app. If you don't want to provide any information and not have an outstanding requirement, answer no to this question. We also have, in the last two bullets here, you'll see that we do have suitability training. That is required before you sell the product, but we have it here if you want to revisit it. And move on to the next slide. All right, so if you have selected a transfer of funds as a premium option, this will pop up as far as the option that you have selected. It could be from a financial institution, it could be a qualified transfer, could be an inherited IRA, or it could be a 1035 exchange, and it will appropriately populate the right form, and then you need to complete the information, the source of funds, the company, all of that information. These boxes are all highlighting what needs to be completed. And then replacement information, very typical. If you're replacing an annuity or a life plan, we have the ability to identify who the company is. We have a drop-down list of all the companies. If there's a company that's not in the list, you just need to type the name in of the company. Next screen. Agent statements, very typical. You've got questions you need to answer. We also have a utility here to do split commissions. Next screen. Once you've completed everything up to this point, there's a DocuSign for all of the parties, including you, the agent, which is noted here as Kim Ashby. Once you start that process, the next screen. I guess we missed out on that. So once they select the signature, they click the button. There's going to be a checkbox to click to agree to the electronic signature process, and then you'll be prompted through each form to click the signature. And then once all of those forms have been, the signature has been attached to, then the app is automatically submitted. So reminders here, and that is that any of the fields in the e-app with a red asterisk are required. They have to be completed. Please use the previous or the next button. If you're navigating through the e-app, don't use your back browser button, because that might cause a problem. And also, if you're pre-filling from using that toggle, just make sure that all the information on the individual is correct as it's moving through as it's populating. And here is the annuity services number. Sean mentioned that before. We have this annuity services number throughout a lot of our marketing materials, which are dedicated to strictly annuity questions, and is the best place to go to ask questions. Any questions for Sean or myself?
And Mark, I think we encourage Google Chrome as the browser, correct? Is the best browser to use?
Yes, there are. I think any of the browsers we will accept. There are one or two that we won't, that we suggest against. I think that's in our marketing materials that we suggest not using, and I think one of them is the Macintosh or Apple common one.
Okay, yeah, I think Safari doesn't work as well. I think Google Chrome is the best bet for browsers. Thanks, Mark. I also, on the screen here, I put up current interest rates. We can obviously change rates whenever. Our goal is to not change them more than monthly. But you can see the current 3-year rate's 5.25, the 5 years 5.6, and the 7 years 5.55%. We're seeing most of the business go to the 5-year currently, just based on where rates are at. What's nice about this sheet, this is kind of your one-page reference sheet to know where interest rates are and what each of the 4 different riders cost. We don't expect those costs to change for the 4 riders. They'll stay consistent. What'll change, obviously, are interest rates, and each time they do, we'll push a communication out, but it'll also be on your agent portal as well. And when you go to illustrate the annuity, it'll obviously have current interest rates as well. So that is all we have, Matt, and we'll open it up if there's any questions here as we wrap up.
Thanks, guys. No, I think you're pretty thorough, and doesn't look like we have any questions. What I would say is, in my short interactions with the Baltimore Life team, they've been extremely responsive, and I can tell you guys from the IMO standpoint, regardless of what carrier you're working with, there is no better resource than having excellent internal contacts, and they pick up the phone every time I call. So looks like a very good group to work with. Excited to start this relationship and have very competitive products to work with you guys and our advisors with. So appreciate your time today, and we look forward to doing a whole lot more business with you guys.
Likewise, thanks for the opportunity.
Thank you, man.
All right, thanks, guys. Take care.
Bye-bye.